Hello, this is the Chartprofit video. Friday 8th of April, about 1 hour into the trading day. This is from the pre-open today. As we know, last week we had reactive and aggressive buying over here on the Tuesday. And we've gone into a range here. Interestingly, here I marked aggressive buying. That was on Wednesday this week. Normal expectation is for that to be exceeded the following day, or within 2 days, about 80% of the time. But I have mentioned many times that when aggressive buying or selling an imbalance fails to follow on and be tested, it's obviously, often a clue that price is close to a major point of control, gets drawn back to it, or a developing point of control. And we just saw yesterday at 2041 that the 2 months migrated up to that level. And this level here now is the level to monitor going forward. I would now be looking for significant buying or selling as marked with the green or red to follow on and give us a clue re the next directional move of some degree. We also know that when a point of control migrates of some degree, it often happens just before the market makes a directional move out of a range like this. So we can say that as long as the E-mini holds above that level, 2041, it's in a strong price location, and this marked again. We also have a minor point of control at 2057 up here. Saw a probe above that on Wednesday. So significant buying marked above 2041, especially time printed above 2057 would indicate higher. 2041 very much now the level to monitor. There are a few minor negatives that we've already talked about. I'll just run through them again, which are probably already playing out like in this range here. The first being just the divergence with price momentum, which is heading down, price generally heading higher. From a trend point of view though, the price, this pulse chart rather, looks pretty bullish. I mean, just the minor concern is that when this turns down, we've seen this many times, if you look roughly at the price where it turned down, which would be about here, this price momentum indicator usually gets back to zero once it's turned down from an elevated position, and usually you get at that point, just before, just after, a retest of this level on price. It's just something I've noticed over the years. So it's a minor concern, of secondary importance when I look at and when I compare that to profile analysis, but it is there. And again, if we look at this chart, this is one I showed last week. This is the New York market breadth chart, showing the daily breadth indicators through last week, and we noted these divergences on these two indicators. If we just pound forward here, an update through yesterday's data, we're looking at something very similar. So we'll see how the pulse chart develops over the next few days. If we get back close to zero and then turn back up, then I will assume higher. If the profile analysis concurs, we're having a series of minor higher lows here. So if we did turn back up from this point, just from a basic charting point of view, this trend from the February low would still be intact. And just to finish on this look at the kind of the negatives, there's three charts to look at. The first is the Russell 2000 IWM, and as we saw last week, this is the halfway point off the high, and we still haven't managed to print above there. I certainly want to see at these levels anyway, price above here. If we see a retracement down to the 2 month, which comes in here at 106.73, and then some indications of strength, that would be a positive. But we have hit very clear chart resistance on this chart. And on the diamonds, as we mentioned last week, again we've hit the 2 year up here. Much better to see price above that level. And the other key chart that we've been following in the pre-open is the DAX, German DAX index. And this week, earlier in the week, we broke below the major at 97.40, and that is actually weak price location. So definitely would like to see the DAX as a confirming chart back above that level as well. Just something else to look at. We haven't really spent any time looking at this recently. It's in the ebook each week. This is what I call weekly structure. We're looking at the spider. See the daily bar chart broken down into weekly chunks. I always look at where the week closes on a Friday relative to the range through earlier in the week, through Monday and Wednesday. If it closes above the range, I should say that's buyers active, like here. So here's Monday to Wednesday's range. We closed above, that's buyers active. Are they ineffective? Well, the range of the week is above the previous week, so that buyers active and effective on the weekly time frame. This is something I developed a few years ago, just based on the old idea that in a bull move, you see strength at the end of the week, weakness at the beginning of the week. And we can see that the following week here, you get that kind of tick shape. And again here, following week, we say no bias. The next week, we close up here. You can see that sort of U or tick shape there as well, coming off the February low. In the longer time frame, what we're looking for that would mark a key change in trend would be sellers active and effective. Before we see that on the weekly time frame, we will nearly always see significant effective selling on the daily time frame. So this is how I try to follow these major and minor trends. A little bit more work than a moving average, but worth it. Quick look at the sentiment indicators. The RIDEX, as we know, hit its lowest level. The ratio hit its lowest level since July 2013, when it broke below the previous low in September, October. Over here, that was close to the low. So the RIDEX traders getting very bearish at that point. We've seen the rally, and generally they're very slow to get back into this market. They seem to be distrusting this rally. The only minor negative here is that we just hit I think I said it was a 57-day high in this ratio, but relative to where we were last year, a ratio around 5 is still pretty low. Remembering these are contrarian indicators, and if we just look at the bull fund assets as we have done in isolation, you can see these blue shaded areas when the ratio dips below this level, usually indicating lows in this bull market, with these levels here usually indicating points where the market's maybe pushed a little too far. But again, you can see how the bull fund assets are pretty slow coming off that low. So we talked about this over the last few weeks, and that remains the case. Be a little concerned if the bear fund assets that we're looking at here in isolation fall much lower. They're around the low in terms of assets in these funds that we've seen since the start of the year. I've drawn in a thin grey line down here, and you'll note that bear fund assets are usually below, or have been below that level before the market starts topping out on any degree, and we're not quite there yet. The other sentiment indicators that I follow, the consensus polls, etc., can be quite useful, very useful at market lows from a contrarian sense. The market's been rallying the last few weeks. None of these indicators, you can read the detail in the ebook, but none of these indicators to my mind are telling us anything particularly useful at the moment. Pretty much neutral territory. So this is the public poll from AAII. We're kind of here on the 4-week moving average of net. That's the black line. One thing that is worth watching on these indicators is the recent peak. So we're looking here at the investors' intelligence. We saw this last week. We went through this. We haven't approached it yet. The 4-week moving average of net. If it exceeds this previous level when the market was up here, that would just indicate on this time frame a higher degree of enthusiasm for the market than we saw at the previous peak, and it's sometimes it can be a point where the market starts to stall at least. Exposure index indicating the money managers are now getting with the rally. Index this week at 73.21 is the highest number since May last year. But again, this particular indicator, although it works very well as a contrarian indicator on the market lows, it doesn't really provide much help in picking tops. Finally, the Lipper US fund flows reported equity fund, including ETF inflows of 3.2 billion in the week to the 6th of April. Gives us a 4-week flow here very close to zero. Clearly a neutral indication at the moment. Looking at the supporting charts, this is bonds. This is actually a more useful chart at the moment. This is a 7 to 10 ETF IEF. We have a 4-month at 110.38 in here. That's above the halfway point off the high of this year. Price, as long as price holds this kind of area here, it's in a strong price location. Down here maybe marking a reversal. So currently this chart looking pretty strong. Currently on every time frame from my analysis, so does TLT. It's holding its 5-month here, 128.43. It's above the halfway point off the high earlier in the year. So this is really strong price location here. And this is GLD, Gold Shares ETF. depending on whether I measure on a daily or a 30-minute time frame long term. The major, which is at 118 on the half-hour chart, and on the daily it's a little lower at 115.50. I said last week that we would monitor this level as well. Price below here would indicate weakness, but you can see this week it's held price and we're back above that one as well now. So again, gold, the gold ETF remains in a strong price location. In a much longer time frame, if we did see time looking at long-term price distributions, from my point of view, if we saw time being printed at this level here, just above 121, this kind of price action, I would think that would be really positive. So last week the dollar index was in weak price location below its 2-year point of control and its halfway point here, off this high to this low in this range, and dollar has not gained any ground at all from that point. At least when we look at the general index, it looks pretty weak here. Against the pound, it looks pretty strong. Pound dollar is still below its 8 month here at 1.426. It's been oscillating around that level recently. If at some point we saw a clear higher low above that level, that would be bullish. But currently, chart prints in a really weak price location, even below its halfway point off the low, which I always mark. So we're in here. So this is a really weak looking chart. Personally, I'm not tempted to look at the long side until we did see some kind of price action like this. Big component of the dollar index is the Euro FX chart, and again here the dollar is looking weak. We are currently printing above the 3-year, which is at 1.1198 in here. We have this halfway point underneath it here. We saw this very minor higher low. Again, I'm not looking at the short side of this chart. Minimum, I want to see price printing back below here. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.